afternoon, everybody. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My long symbols are pretty much the same, but I don't have any shorts anymore. The last time I did an afternoon meeting, I still had Palantir and MSTR. And I'm out of all the shorts. They worked a little bit too well. All right, so the market today, how'd we do? We closed green in the SPYs. SPYs up 0.4%, and that's with dropping after dropping $1 from the close. So SPYs with a solid, I don't know, 0.5%, 0.75% gain on the day. The Qs closed very flat, I'm pretty sure, on the day. And the IWM closed down a little bit, 0.4, 0.5%, something like that. TLT closed up 1. All right, let's take a look at these charts. So another crazy session, but this is one of those days on a day 4 gap down where you are at extreme extension into support, and everything is kind of lined up that says you have to buy. And that's really what we discussed in the morning meeting. And on top of calling for the buy in the morning meeting, intraday, we called out the when and the where and the how, which was basically off the 4th 5-minute bar of the day as this doji came in. Everything just lined up. So this little hammer candlestick doji is a buy signal, not by itself. We can't just be studying what a candle looks like by itself or we'll lose money. It's with the context of everything else. So you got a ton of extension on the 5-minute chart. Forget about the daily chart for a second. You got a ton of extension on the 5-minute chart at this low. You got a lot of extension because the gap down itself was so big. We had a % gap down this morning. So that automatically creates extension. Typically, when we have those large gaps, we want to look for moves, at least in the short term, in the other direction until we're able to satisfy the extension that actually comes from that gap. You still want to do it with a signal. Sometimes that signal means you're getting immediately bought up off the open. You can be buying versus opening lows. Or sometimes with big gaps, you might see like a little bit of, for lack of a better term, panic selling. I wouldn't really describe this as panic selling, but that's why I said for lack of a better term. You get just some opening sellers who are being kind of forced out of positions based on the gap. And then you get a pivot, a signal to be able to buy. So that was this hammer candlestick low at 945. On the 5-minute chart, we were trading as low as 546 spot 87, which was low of the day, with the 80 MA up at like 551. So basically had like $4 of downside extension on a 5-minute chart at 9:45 a.m. this morning. So that was a great buy signal. So what does this buy signal mean based off a 5-minute chart? It means that you should be looking for a move to somewhere between the 8 and 21 EMA. So take that trade. You always want to be booking some profit right away, mainly to cover risk. It's more about covering risk than it is actually putting money in your pocket. Then you take more of your real sales, put real money in your pocket at the 80 EMA, at the 21 EMA, at the midpoint between the 8 and 21 EMA on the time frame that you bought, which in this case is a 5-minute chart. And then maybe you want to see if that retracement higher, because that's what that is. It's a retracement higher in a stock in this case that is weak, or a market in this case that's weak, can actually become a reversal higher. What's going to dictate whether or not that retracement actually does become a reversal? Well, a variety of factors, but one of those major factors is the daily chart. Where is the daily chart telling you that we can go? And that's really why, even though I'm doing this backwards right now, I'm just starting with an analysis of the 5-minute chart. We start with the big picture. We start with the daily chart with our game planning, and then we work it down to the small time frame for the execution. It was really the daily chart that said this morning that we need to be buyers, and it was the 5-minute chart that showed us, again, the when, the where, and the how. Why is the daily chart telling us that we should be buyers? Well, said a dozen times today. It's a day 4 gap down into extreme extension and also sort of into support for the SPYs and the SPX. But day 4 gap down with at lows today, we were just below 547 with the ADMA basically at 564 right now. So that's what, it's $17 a downside extension on the SPYs and the daily chart just to the ADMA. And that's not even factoring in the fact that we started at moderate upside extension just a few trading sessions ago to being $17 downside extended. That's the SPYs. I think the Qs at lows were like 20. Q low of the day is a bit above 457. The ADMA is at 478. So almost $21 of downside extension on the daily chart of these Qs at lows. And again, day four. Day four is important, right? What do we know? Day one down, not a good sign. A lot of times that there's going to be follow through, especially if that's like a engulfing candle, or what we talk about a day to take notice of. Where the day two, generally speaking, you want to be very cautious on just making a stand on day two. Maybe day three, if you have enough downside extension, is where you could really begin to look to start to go the other way. Day four just adds on to that even more. So today, with Friday being so weak, was a day four gap down with the SPYs being, I think I just said $17 extended, the Qs being almost $21 extended, short-term tactical on Friday closing in the green zones. That gap down was so big this morning, this thing was off the Richter scale. Short-term composite closed at 10 on Friday, would have been down significantly more with that gap down. Plus, there should be some degree of demand that can be overwhelmed, as it was on Friday, from systematics and from the pension rebalance. So it was really just like everything is lined up that's saying you need to be looking for longs. I would put out there that there is definitely a large degree of uncertainty still, as we are right in front of this tariff liberation day or whatever we're calling it. But that's just where you want to, technically that's where you want to make a stand and go the other way on moves. And by doing that, it paid. And I also just think that actually getting through the weekend, I think some of the selling became a feedback cycle on Friday of selling. Some of it was just fear into a weekend, which is not the first time we've seen that this year, in front of these looming tariff announcements. And we got through that weekend. We're still not through the actual event itself, but we got through the weekend. It gave us this really big gap down, and it just led to a remarkable buying opportunity, at least for the short run. And into the close, you want to be booking a little bit more profit, but keeping in mind that we could work our way back to the ADMA on the daily. It's not impossible for us. I still have the Qs up. It's not impossible for us to see another $5, $8 of upside in the Qs if we get a little bit more follow through. And beginning of April here should still be a little bit supportive from a market dynamic perspective, though again, there's just so much uncertainty and headline risk out there right now with everything that's going on. You certainly have to be careful. But it was the right thing to do. It was coming and buy. And we advocated for it in the morning meeting. We advocated for it in real time here. We said, make sure you hold some of your position because we could get a bigger move off of that. And look what we did. I mean, this is a huge move intraday. We traded up like $12.50 or whatever off lows in the Qs all intraday. So just a great opportunity to make some profit. For myself, I added to any long swings that I'm already in. I traded NVIDIA long, I traded TQQQ long, I traded Meta long. I was basically long TQQQ, long Meta all day, trading them really actively. And then I just liquidated those positions into the close. My target in Meta was 580. It got close enough, almost 579 when I had great pricing here. I got real heavy down in these mid, 555, 557 area. And then same deal with the Qs. TQQQ, my target was just 58 on it, basically a little bit more than a gap fill. We got close enough, so I just liquidated that position into the close as well. So day trading today was great off that call, and especially if you had a good game plan in place for reward maximization and you were patient with it, you could have rode that intraday trend higher all day. And then honestly, doing things bigger picture, I don't hate some bigger picture swing buys if you're keeping some overnight, but obviously, again, we have just a lot of risk, a lot of risk out there over the course of these next few days and this week with everything that's going on, the end of the beginning, if you will. So that I think covers all that I've got on my end for this Monday. It is the last trading day of the quarter. It is the last trading day of the month. The NASDAQ fell 8.3% in its worst quarter since the second quarter of 2022. That's a statistic I'm seeing here from Bill. So pretty rough month for that index, as we're just seeing a lot of money get rotated out of Mag 7 and going to Europe and China and things that are viewed as safety plays. But we're through that quarter, and we'll see what the second quarter of 2025 has for us. That's all that I've got. I am happy, like always, to take a look at any questions that anybody may have. Yeah, just seeing some commentary from Pete on the Newsmax IPO that occurred today. Obviously, just really crazy. I didn't even know that this thing was IPOing today. It seems like it was pretty low float, and you know, when you've got a low float like that, you can really run these stocks sometimes. And I find that a lot of these names, we're very far away from it, end up really struggling once the lockup expiration gets close. But that's, I think, 6 months out from the actual IPO date. So it's one that's worth keeping an eye on, but certainly make sure that you're careful, because sometimes, especially if it's like a low floater, meme type stock, they might bring it up to $500, even though it doesn't necessarily make sense. So you just need to pick your spots. I'm sure Newsmax getting to 500 makes about as much sense as Newsmax getting to 100. So at that point, who knows what it can do. So yeah, that was our IPO today. That was after we had this much hyped CoreWeave IPO, CRWV, on Friday. This was my best name on Friday, trading it to the long side, which isn't saying much because I got smoked on Friday. But this was my best name, and then today it was just heavy and crappy, and I hardly looked at it. So I've had a couple IPOs and a couple different trading sessions. It's weird for a Monday IPO also. Even back in the day when we would see IPOs all the time, it was always very rare to get a Monday IPO. So who knows? AJ asking me about GLD. Yeah, so GLD is extending higher. So if you're long it, I probably would be booking some profit at this point. It's starting to extend higher. I don't like when stocks, or in this case it's a commodity, really begin to extend, because that usually means that, at least in the short run, you're closer to the end than the beginning of the move. The big picture, though, we don't know. It's beautifully uptrending. Gold is beautifully uptrending. So could certainly give some continuation, but I would not be buying 288 into a day 3 up as it's starting to turn slightly parabolic. I also would be cautious to short it. I don't really like trading gold, GLD or SLV, period, to be honest. You know, as you can see here, just looking at this daily chart of the GLD, it's very gappy, but it does tend to trade fairly technically pure. And there's something about these precious metal commodities, when they really begin to move, they just have a habit of feeding on themselves and giving further and further momentum. So we're seeing that from GLD. Would not be putting on a big picture short at this point, but I certainly wouldn't be chasing the long. FCX got mentioned, I think, from Billy D pre-market this morning, about the stock dipped down with the market, but is a potential beneficiary of tariffs. And that seems like a pretty true statement. One of the very, very few winners of the tariff war that's out there could be this FCX, provided that the economy doesn't slow down so much that people aren't using copper in the same way. But great opportunity to buy the dip in this, along with a lot of other things today, into the gap down. So if you have FCX from a good price today, I would keep it. I would swing it and see what it can do. Looks okay. Anything else? over in the YouTube from Robert, if you run out of stock at the EMA's area, where would you reopen your long again today? Not sure what time frame you're talking about. Or if you go long, are you already including your big picture mentality and trying to hold some shares through the EMAs from the low of the day? Yes, it's that. So the second question I think is the answer to the first question. So the first question is basically, and I'll just assume a 5-minute chart, but maybe you're looking at a 15. If you were buying down here and you ran out of all your stock in this moving average area, what do you do to buy back? I find that buyback, if you were to do that, can sometimes be a difficult trade. You need to have the conviction that the market on this time frame, keep in mind this is a counter trend trade on this time frame. The daily chart's really important. The daily chart's telling you that you can get more. But if you sell all your stock like into this first move, you need to be looking for a signal that you're going to get a higher low. We actually did call out a long off this 10:30 engulfing 5-minute candle where the volume picked up a little bit. So that could have been one opportunity. When we broke up here, you could have been buying versus this low. That's a very hard trade to do on this 5-minute chart in a vacuum. I think, again, when you think about where the big picture is and the extension on the big picture, you can get a little bit more conviction to look for that higher low. With that said, if you were doing a good job looking at the big picture to begin with, and this is your second question answering your first question, if you did a good enough of a job looking at the big picture to begin with, I don't think that you should have gotten out of all your stock into this move. What I always like to say with these counter trend moves, again, if you're purely trading on this 5-minute chart for a second, you probably want to have sold anywhere from 50 to 90% of your position, maybe even 95% of your position by the time you get to the 21 EMA on that time frame. But that's a huge variability, right? 50 to 95%. That's a huge difference on how greedy the game plan is by the time you get to the upper band of equilibrium here on the 5-minute, which is the 21 EMA. So what dictates whether you're basically out of the entirety of the position by that move versus you're only out of 50% of the position on that move and you're being really greedy? What dictates that is the daily chart. When you look at a daily chart that has that degree of downside extension and all the other factors that we discussed, you just know that there is a much higher probability on the small time frame that this retracement higher actually becomes a full-on reversal. So I think that answers both your questions. One, figure it out with the original game plan just from the big picture of the market. And two is, I think it's a tricky trade, but you can look for that higher low to come in to be able to establish a trade as well. And as a team today in the VTF, we actually called out both of those as longs. Called out this long, and then we called out this long. So it was a pretty good job. Varun wants me to look at his usual names. Boeing, you ask me about Boeing all the time. I continue to not have a strong opinion on the stock. I've always found the stock to be difficult to trade. There doesn't really look like there's anything new from the last time we looked. You got big resistance that it has not been able to get above, which is like, this recent pivot high, like 180, 184.50 through this like 189, but then there's also bigger resistance at 190, and I think if I remember correctly, there's bigger resistance on the big picture around 200. So just a lot of work this thing needs to do in order to get higher. A lot of that will depend on the market a little bit as well. Looks like the main reason why it probably pulled back these last few days was because of the market. Though if you compare Boeing with the SPYs, a lot of relative strength in this name compared to the actual March low. AVGO, you can take a look at. Yeah, AVGO has been a struggle. Obviously, all of the semiconductor names have been struggles. AVGO, that earnings report, it was one of the last major companies to report earnings in March. It was a really good report, and the stock held in great on like that first leg lower in March compared to the index. And then it just couldn't actually break up and establish this support. And I think we even called out a potential short in one of our morning meetings here on like the morning of the 26th because it was breaking that support and then just really, really weakened out on the break of that support. It became very disappointing. Gave a nice hammer today. Obviously, the semiconductors, like almost all stocks that you look at, are well off lows. NVIDIA held that 105-ish support that we discussed in the morning meeting, and then intraday we were communicating a 104 buy. AMD held $100 today. Maybe it's trying to give a little bit of a higher low. AVGO, like a day 5 to the downside with a lot of extension for this name, given a hammer. So I like it, and I honestly like it as a swing long as well. Obviously depends a little bit on the market, but I think that you could fairly easily get another 8 to $12 up on this AVGO with a moderate amount of market help, which that moderate amount of market help is definitely the tricky part. And then Oxy. Yeah, Oxy's disappointing. This is not the name to focus on in the XLE space. Chevron's the name to focus on in the XLE space. ExxonMobil is the name to focus on in the XLE space. XLE itself, by the way, we called out a long this morning versus that $92 area that it has now established as support over the course of the last week or so. It turned into a great trade, and the usual leaders, they let up. ExxonMobil let up. Chevron led higher, though it closed a little bit too much off those highs intraday. And then Oxy is weaker for whatever reason, despite Warren Buffett being in it. Can't seem to break higher. You could pay attention to that $50 area, but it's a laggard in the space. Another one that I watch sometimes is Apache, but Apache is also real laggard in the space for whatever reason. So, kind of covers that. I'm going to ignore you guys on the China, on what you're saying about your whatever. That pricing in chips is bad as like summer of 2022. Okay. Cort, C-O-R-T as a short. I know nothing about the stock or what the news was that brought it up 100%. So that's important. I generally do not, even though I've been trading a lot of VKTX. I generally do not trade biotech stocks. I do not like to trade biotech stocks. They're just too dangerous. It's always the biotech that is gapping up 500% on some drug news or gapping down 97% on some drug news. So these are generally not the names that I want to trade, especially if it's low float. It's not. It's got a 93 million share float. It's got a 17.5% short float. I don't like to short. We kind of were just talking about day counting a little bit earlier. I don't like to short day twos. So because this is a pharmaceutical stock of some point, a biotech stock, I probably will not trade the name at all. But if it wasn't a biotech stock and I was just looking at it technically for how I would trade it, I wouldn't look for tomorrow for the short. Even if it works, when you're doing this counter momentum stuff, counter trend stuff, like we talk about all the time, you're better off missing it than being too early because you can get run over if you're too early. I would prefer to look at this on a day 3 or a day 4. So today it went from 95 to 115. Tomorrow it goes from 115 to 127. The day after tomorrow it gaps up to 135. That gap up is the gap up I'd be interested in shorting if it played out in the scenario that I just described, which doesn't happen too often. And again, I probably still wouldn't do it with this name because of it being a biotech stock, but generally that's how I think about it. Day 2, too early. It could crash back down on day 2. It could double the move on day 2. It could give an inside day on day 2. But it's too early because if it happens to be the situation where they give the second leg of momentum up to 127 or 137, and you are starting to short this thing at 115 because you think it's too extended on the daily, you can really get hurt. So I'd avoid. Tate asking, has the AI bubble popped? That's a great question. Has the AI bubble popped? I don't know if the AI bubble has popped. I'm not sure how big of a bubble it got to be. I would say that maybe some of the air came out of it. Like the forward PE in NVIDIA down here is starting to get pretty cheap. And obviously there's a lot more uncertainty now, and that's probably the reason why it's become cheap, and DeepSeek and everything else. But The forward PE right now is like, I don't know, 18 or something like that in this area. So the stock is starting to get cheap. So um, they're worth watching in these areas. Obviously, there's a couple components to what actually makes up a PE multiple, right? And one of those main components is earnings. And you can look like you're trading at a cheap PE, but that could become a value trap if the earnings themselves continue to decline. Then the stock is going to continue to decline. So obviously it depends on how well they're able to meet those earning expectations and how they continue to guide going forward. But they're worth watching for sure. I really don't know. I don't have a great answer to your question there, Tate. It's I don't know. It's too much for me. Um, it really depends on what the future of the world looks like, and I don't have the answer to what the future of the world looks like. How much does AI come into play versus how the expectations have built out? It certainly doesn't seem to me this AI move, even though some of these stocks went crazy. This doesn't feel like a bubble like what we saw in growth at the end of 2020, early 2021. To me, that was a real bubble, and we knew it at that time. You talk about PE multiples; they were insane on some of those stocks. Some of those stocks were trading at insane numbers compared to book, insane numbers compared to revenue, like unsustainable. That was a legitimate bubble. On the AI bubble popping, I feel like it's less of a bubble and more of like a theme. And what does that theme turn into over time? Does the theme pay? Does the spending that the Googles and Amazons of the world do and the Facebooks eventually meet their bottom line or not? And I feel like we've been talking about that for a couple quarters, that there was becoming a lot of risk with the amount of spend that those names are doing, that they need to actually deliver some revenue off of that spend. And if they fail to do that, well, then they'll begin to pull back that spend, and then that will, their stocks are negatively impacted because of how much money they spent and that they're not getting a return. And then obviously the stocks of the companies that are the benefactors um, of AI would lose it as well. Um, so it's kind of hard to say. We'll see. Varun here just giving me some multiples on the Mag 7 stocks. Yeah, Google's the cheapest one. Google trading at 15x. It's forward 2026 FactSet estimates. Apple strikes me as a bit expensive, as like the one in there that's a little bit expensive for the amount of growth that they've actually been having. It's countered a little bit by their huge buyback. They could potentially just buy back their way into that price. But Apple's actually made me a little bit nervous with their seemingly lack of recent innovation and the multiple that it trades at with the growth that they have. It's not as bad as Tesla, which is in this thing that you're telling me, which is by far the worst. Yeah, the dot-com bubble was extremely more exaggerated than what we're seeing here. And in the dot-com bubble, a lot of those dot-com names didn't even have revenue. It was really crazy time. So I do not think that that's what we're going through. But in the same way that there was a huge expansionary period, a lot of the expansionary period of the stock market in 2024 came from NVIDIA. Now look at this move that NVIDIA did. Remember when we bought this? It was pre-split. It was a $500 breakout. I was eyeballing this $500 breakout into the beginning of 2024 and capturing part of this move. It was sick. But look what this thing did in 2024. Basically, you had your $500 breakout, $50 split adjusted. A couple months later, it's at 96. A few months later, it's at 140. So that really helped to bolster things up. So, and I still wouldn't necessarily consider this to be a bubble. At certain times here, the stock got a little bit expensive, and then it would give pullbacks. It more matters on what the theme turns into. If the theme rotates where AI becomes a failure and doesn't lead to anything, then yeah, NVIDIA can go down further. But I think that if even some of those expectations are met, then these are starting to get down to good prices, bigger picture. Tate, from a headline perspective, the market feels oversaturated. I'd argue that Microsoft developing its own generative AI was one of the biggest creativity related headlines in the last 3 years, yet it was forgotten by the end of the trading day. Okay. Yeah, compared 1999 to today with cryptos. Yeah, I get you there a little bit. Um, yeah, the sentiment might not be there, but I mean, to me, crypto is like it's like a dot com that doesn't even have revenue yet. It, maybe you can make an argument for Bitcoin or Ethereum or like a couple of the major ones, but I mean, what's the net market cap of, if you took out like the top three cryptocurrencies, what's the net market cap of all the other ones in existence? I mean, I think it's like $1 trillion number, isn't it? It's just crazy for assets that don't make any sense or do anything or act as a currency or provide any utility or pretty much do anything at all. Yeah, it's just they keep pumping it to themselves, and you got Michael Saylor out there holding it up. um, yeah, Doge is the size of some major companies. It doesn't make any sense. It could be like the one positive read through on if we were to enter into like a real legitimate growth slowdown bear market is that hopefully it just implodes crypto once and for all, or let it become something that's worthwhile to me. Someone please make an argument to me on the worthwhileness of cryptocurrency, and I'm open minded to changing my mind. And I've owned it in the past. I've mined it in the past. I've learned a lot about it in the past, but I don't know. It's not great. Um, Anything else today, ladies and gentlemen? Back over to the YouTube from Steven. Any updates with the vol chart? I remember if we stayed within a certain range, you said buying would occur. Yeah, so there should be some buying that's occurring based off today alone. I didn't get to see what the exact numbers were, but I think in like a flat S&P there was supposed to be a couple $1 billion worth of buying. So provided that we don't continue to get like Friday was a day that was so big on a realized basis that it reduces the buying that comes from vol control. But if we continue to get days where we're closing within a percent up or a percent down, vol control should be continuing to buy and continuing to act as an underlying bid. And that's why, and again, at least initially here, I was wrong, but we'll see what it turns into. I've argued that, so like this was a move that happened very, very fast. That was a 10% correction, right? It was the fifth largest since 1950. And then off of that correction, we had a nice little bounce back. I would argue that if we went down another 10%, but from this pivot high, or if we end up going into like more of like a 15-minute full-on correction for the market, I would still argue that that next like 10% lower happens much slower than the first 10%. I would argue that even the next 5% lower would probably happen more slowly than the next 10% lower. That was my thought process last week. That thought process led to me buying the dip earlier and more aggressively than it would have otherwise, which led to me getting absolutely smoked on Friday, which is fine. You know, it sucks. I mean, but it's just part of the trading business. You don't make money if you don't put risk on, and you need to be putting your risk on based on a solid foundational thought process and thesis. What I didn't, I guess, take into good enough account for Friday's trading session was that the PCE and University of Michigan numbers being as bad as they were compared to expectations could create so much selling that it could overwhelm the stabilizing effect, I think, of some of the systematics coming in and being buyers at this point. I mean, what I've been arguing when you think about the velocity of the speed lower is that, and I don't know what the exact numbers are, but like CTAs sold, I'm gonna make up a number, but my number is like a guesstimate that might be somewhat accurate. I'm gonna estimate that over the course of this entirety of this down move, that CTAs sold over $100 billion worth of SPX. I'd be surprised if it was under that amount. I'm probably being conservative with it. So you had, I don't know, probably well over $100 billion of selling just coming from CTAs, and that's just one cohort when everybody was a seller. So that creates selling, right? That pushes the market down harder and faster. Here we know that they're not selling, and in fact they're buying a little bit. So you just think about that. That's one cohort. You need to think about all of the market participants that exist to figure out how the market's going to move. But forget about their buying for a second. Just the fact that they're not selling. You had a $100 billion plus seller, that's my guesstimate amount, over the course of this move that just isn't here at all now. So does that mean that there aren't other potential sellers that exist? Of course there are. And they really came out on Friday after we had a not great PCE and a not great University of Michigan number that were able to make up for the fact that the CTAs aren't selling anymore. But when you think about it like that, when you don't have CTAs selling in the same way, and in fact they're actually acting as a little bit of a cushion of support with some demand, and that vol control recently is pretty much the same way. That's one additional dynamic that is changed here that I think would slow down the velocity of any move compared to this, provided that we don't have other really negative headlines that hit that create other sellers that come out. That's pretty much what happened on Friday. So today we had a really good bounce back from a realized vol perspective, because that's what they're thinking about when they're coming up with the vol control numbers. The way that we close today should give way to further additional buying from that cohort this week. But could that buying get overwhelmed by really bad tariff headlines that come out this week? It absolutely can. But my thought process is that we should be able to have some stability on the downside in comparison, at least, to this move, which is not me saying that we can't go down. I'm not saying that we can't go down, and I'm definitely not saying that the market's bullish. But my thought process is that we're not going to get a repeat of if we went from 610 to 550 in 3 weeks. I'd be surprised if we went from, what did I just say, 610 to $60? I'd be surprised if we went from 575 to 516 over the course of 3 weeks starting last Wednesday. But anything can happen in markets, so we'll see. From Apex Joy, do you think PGY and AMD has relative strength compared to other stocks that you mentioned, like AVGO, Google, Amazon, and Meta? Well, AMD had been very, very weak overall, so it's hard to really argue a relative strength argument on AMD. I did like a lot the degree of this bounce back, and it did show some recent strength. I loved that it broke above this downtrend line. And then last week it got hit down for 2 reasons. It got hit down because of the market, but it also got downgraded, I think, on Thursday. It might have been on Friday. That had to be weaker on that day. But otherwise, yeah, I think that AMD is actually holding in pretty well. If I had to be long a semiconductor name, it would be towards the top of the list. AMD, maybe NVIDIA would be my probably favorite ones to be involved in right now. AVGO is a little bit tougher until it heals a bit more on the daily chart. Does relative strength a good indicator for strong stocks? I mean, relative strength by definition says that it's a strong stock. But you also just need to keep in mind that you can have relative strength on different time frames. So you need to just be thinking about the time frame that you're looking at, and that relative strength can be lost if new news comes out or whatever, the environment changes, something like that. You can lose that. But otherwise, if we're speaking in generalities, if I have to choose to buy something, I would rather buy the name that's relatively strong than relatively weak. Back over to the VTF. Would you say that we're still in a secular bull? Yeah, we still have a rising 200 day. So we're in a rising 200 day. The market hasn't gone down 20%. Do I see us making new highs? That's a much, much more difficult question. I mean, eventually, someday, unless the world's going to end, we will make new highs. Do we make new highs in the month of April? Do we make new highs in 2025? I don't know. I wouldn't be surprised if we don't make new highs in the entirety of the calendar year of 2025, to be totally honest. But it's evolving. It's like I was talking about this a whole lot when just earlier last week when we retraced up to 575 on what's the next move. Is the next move down to new lows? Is the next move getting the market back up to 600? So much of that comes from tariff clarity that we don't have any of. Tell me, do so many great negotiations occur over tariffs that we end up with lower tariffs than we started with? Then yeah, we're probably back towards all-time highs, back above 600. It's like I remember last week off one of Pat's notes, and this was right when we were trading at 575. Barclays came out with a note, and the note from Barclays, and I was highlighting that just to show just how uncertain the environment is right now. Because I felt that at 575, the technicals here were super uncertain, the macros uncertain, and then Barclays came out with this note that I thought was just a perfect example of the difficulty of, do we go back to all-time highs? Do we go to new lows in the year? It said that, I think they calculated in a 25% probability that tariffs improve by so much that we get back to all-time highs. And I don't know what time frame they were talking about. I'm assuming 2025. And a 15% probability that full-blown tariffs as they are being discussed really come to play. That leads to a 30% down bear market, in which case we're only a third of the way there. So you got Barclays saying 25% chance of all-time highs, 15% chance of a 30% bear market. That obviously leaves the other 60% or whatever in the middle of things of different ways that can play out. And I just thought it was a perfect example of the uncertainty. There's so much macro uncertainty. Like, tell me how things like tariffs, and there's a couple other equations in there, end up playing out and what they look like 1 year from now, and I'd be able to give you a much more better answer on if we're going into a bear market or if we're getting back to all-time highs. But I don't have that answer. You don't have that answer. No one has that answer. And there are a lot of factors that are at play that tend to lead me, big picture, to be more bearish than bullish. But that then circles back to I'm a trader. So as a trader, even if I'm bigger picture, more bearish, on a day 4 gap down with $17 of extension in the SPYs and 21 in the Qs, I'm buying that all day. And if I lose money because we get $28 extended, so be it. That's a risk that I'll take. I'll take any day of the week because I'll make money in the long run, even if once in a while it doesn't pay. From Tate, I played a game called Off the Grid, which is built around a Solana ecosystem. I'd say there's an 80% chance GTA 6 will have its own economy or crypto market. The only real legal case I see for it. Okay, interesting. Good information. Why would they use? Why would like a GTA game use crypto compared to the way that they've always done it traditionally, where, and again, I don't play a lot of games anymore, but I'm pretty sure that you can just buy. It's almost the same thing. Could you almost argue that that's always existed? Where I think for like a lot of games, like if you wanted to like spend money on like the cool upgrade of your clothes, or for GTA, like I don't know, getting a better car or something like that, that you would just make an in-game purchase for it, and then they almost give you like in-game credit. What's the difference between, in that case, having some in-game credit into your account versus having the GTA crypto? Um, I don't know. I'm asking. Cool. Thanks, Pete. Yeah, for sure, Rock. Me too. Yep. Blockchain to me has always sounded like an excellent technology. Uh, Cryptocurrency on top of blockchain has never really made any sense to me. Like you can have that without having. You can have the benefits, I would think, of blockchain technology and its uses without having to have a currency that is related to the use of that blockchain technology. It's just that everyone seems to try to monetize it through that blockchain technology. All right, looks like we got through everything. It's 5 o'clock. It's Monday. It's gonna be a long week, so let's wrap it up there. Have a great night, everybody. I'll see you all tomorrow. Oh, they can monetize peer-to-peer transactions so that the game can make money off of it. Yeah, I kind of get it, but it still doesn't need to be a cryptocurrency, or I guess it's the same thing, and we just call it cryptocurrency. On if I got my token to buy my GTA update, and you have yours, and I don't know, give you some or sell you some or something. I get it. I definitely get it. So appreciate that counterpoint. It's good information. Have a great night, everybody.